Despite some seemingly good news in the crypto world, Bitcoin remains in a fairly weak and low volatility trade. Now, this week's news of London-based Jacobi Asset Management launching Europe's first spot Bitcoin ETF should have been a tailwind for the coin, particularly if the implication here is that this could push U.S. regulators to move up the timetable for a domestic competitor. Oddly, Bitcoin seemed to brush off the news and lost 2% of its value between August 14th and August 16th. The pressure on Bitcoin appears to have two components. First, yields have risen. U.S. 10-year yields have shot up from 4% on August 8th to a current level of 4.21%, making non-yielding assets like Bitcoin relatively more expensive to hold. Perhaps more importantly, though, is what appears to be a broad corrective phase in risk assets in general, as the Nasdaq has lost over 5% of its value just since August 1st. The theory on that is that oftentimes trading desks have to sell certain assets to cover margin calls in other assets. This tends to create some unexpected correlations between assets. Now, the CME has recently launched options on both micro Bitcoin and Ether contracts. We're going to be using the micro futures for these examples. Also, on July 31st, CME Group launched a Bitcoin versus Ether ratio futures contract. So now you can trade the spread using one contract. Now, if a trader believes that Bitcoin will rally from here, they could express that by buying the CME micro Bitcoin contract August at 28,990 and target a move to the near July highs of 31,500. A stop for this trade can be placed below at 27,500. Now, this trade can make $251 if the target is reached and risks $149 if you're stopped out of your level. Now, if a trader believes that the recent weakness will continue, they could sell the August micro Bitcoin contract at 28,990 and target a move to the May lows of 26,000. A stop for this trade can be placed above at 31,000. Now, this trade can make $299 if the target is reached and risks $201 if you're stopped out of your level.